Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. So I just want to go over some quick market action. As you all know, my focus mainly is on gold and on the stock markets, mainly because I'm more into precious metals than anything. And I do think that I am going to chime in a little bit about energy just because I've noticed something that no one else is talking about, and I was just saying this could be a possible short-term top in oil because I notice, I'll just go with energy on finance, Twitter, and whatnot. A lot of the uranium bulls and a lot of oil bulls are getting very cocky, and they're talking about how great energy positions were and everything, and that's generally a sign of the top. And on Yahoo Finance, all I hear is articles about high gas prices, high gas prices, high gas prices. And I even heard on the radio today driving about high gas prices. So when you hear about high gas prices, high oil prices everywhere, that's generally a sign of a market top, whether short term or long term. I don't think it's long term personally, because I think inflation is going to really drive up this price. But what could cause that top is the easing of sanctions on Venezuela. You never know. I was reading stuff that Biden was meeting with Venezuela. And so who knows? They might be, making a deal. And who knows? Maybe a lot of service companies will go in there and they'll hire them, because a lot of oil companies like Chevron and Exxon, they won't buy assets there. But because they're inefficient in Venezuela, they might hire Schlumberger, Halliburton, get that oil out there, get it to market, dump it on the market, because they're out of SPRs. But one thing we do know is they are not willing to just stop trying to roll up their sleeves and play another trick on the market. So that's what I think could happen over the next couple of years or whatnot. I personally think we'll see $160, $170 oil. Never know. I'm not investing really in oil stocks per se because, well, service sectors don't have big dividends. They're volatile. I think they'll do well. But oil stocks, I think there's a lot of geopolitical risk. And I think and I'm not just talking about over in the developed world. I think in the first world, you're going to start seeing things like asset seizures and whatnot, and massive higher royalties. So energy, I am more scared of than I am. So that's the only reason I haven't got into a lot of energy stocks lately. So they could go up. I'm just sort of weary. So, but I am bullish. I've always been bullish on energy over the next 10 years, but do not be, go with caution. Asset seizures could happen any moment. And I'm talking about the first world. I'm not talking about, developed world. And so that's something you're going to have to watch a keen eye on. Because the predictability of it is becoming less and less. So anyway, going back to the stock market and gold, I would say in terms of gold, I would say that has done on Thursday, despite a high inflation number, gold did really poorly. And on Friday, it actually did really well. And I will explain that easily. On Thursday, despite having a higher than expected inflation number, we had a very, very strong economic data. Retail sales went much higher than expected. Bad government economic data is good for gold, and good government economic data is bad for gold. And we had very strong government economic data. Everyone will say, I was reading comments and everything, they were saying, well, how's the market going up and gold going down when inflation goes up? People don't understand the current sentiment of the market. Right now, high inflation numbers could mean markets being forward looking will say, well, they'll start thinking, okay, well, the Fed's going to raise and tighten some more. And so high inflation numbers now, unless they're really way out of whack, meaning like if we saw a 6 or 7% print next month, then they're not going to be strong for gold. If we see a 3.5 or 4% print next month, it won't be that strong, and it won't cause gold to rally. It will have to be something like 6, 7, or 8%, because then the market might be like, oh, well, maybe these rate hikes are not effective. So inflation is forever. So you got to look at the market mood. In terms of the economy, strong retail sales, it doesn't matter what the inflation numbers are. If the economic data is strong, people will invest in stocks and businesses. They have the Warren Buffett mantra of buying assets, buying cash flowing assets. They think a lot of people, investors, think gold's a pet rock. They're wrong, but they think that. And so if you have a strong economy, it doesn't matter what the inflation numbers are. They're going to, and not only that, with the strong retail sales and a high inflation rate, a lot of the sentiment was, wow, look how strong the U.S. consumer is. And so that's why the market went up. And here's the thing. Most of those retail sales, the increase in prices were for gas. And that's what really ate them up. And in terms of, I personally have a hybrid and my wife has an electric vehicle. And since this is a finance channel, we're doing this because I see $160 and $170 oil. And so we are buying fuel efficient vehicles only. And that's, I mean, I would encourage you to do it. I'm not going to tell you how to spend your money or how to invest. This is just a YouTube channel and my thoughts. But that is something to look into. In fact, when the used car market was really hot, my wife and I, we sold our used cars for a high price and bought new cars, used the money we got from a down payment. And so now we have one electric and one hybrid. And I have a hybrid because I'm also worried about power grid failures. So at least the hybrid car we can use on gas and we can still drive. So that's what I'm doing. So, but going back, the stock market, that's the whole mood, is that the economy's strong and that the consumer's resilient. So that's why gold is not going to do well. Now, the reason why it went up on Friday is one thing Avi Gilbert taught me, and the reason I talk about him is because it's all complimentary, by the way. Is one thing he taught me is what drives markets is sentiment. And sentiment indicators, sentiment numbers were very poor on the U.S. economy on Friday. And that's when gold really shot up. Gold was not trading that well. And then I forget if it's consumer sentiment or Michigan sentiment. One of these sentiment numbers came much lower than expected on the U.S. economy, and gold just went up and the stock market went down. And the one thing he taught about is twists and turns. What drives a market in a bull market is sentiment. I think it's a combination of fundamentals and sentiment. He doesn't agree with fundamentals. I'm too old for any. I think technicals, fundamentals, they all have their purpose. For all those who are saying charts matter and charts are the best and fundamentals don't do well all I have to say is Warren Buffett. I think he's did pretty well using fundamentals. So I think all of them have their purpose. They all have their strengths and weaknesses. And I think you can do well if you're very good. And one of the reasons I have this channel is to teach people real fundamentals. Most people don't know it. Government data means a lot. And if you don't believe me, look at the last 10 years. Look at the 2010s. Gold was supposed to be the best investment. I thought silver would be the best investment of the decade. I was wrong. But I didn't understand the importance of government economic data and how it influences the markets. And I saw that when I was a bullion salesman. Government data and bullion, it just traded. There was too many correlations. You know, I know causation and correlation doesn't matter, but they traded in tandem way too much. And I was watching the price every minute when I was a bullion salesman because I had to have it in front of me for when people bought them. I had to have a spot price ready. And, you know, bad economic data, boom, gold goes up. Strong economic data, boom, gold goes down. And I've been over this many of times. I can do a video again later about, QE3 actually did propel gold. And if you look at February 2013, they said they started to taper. And that's when the gold price started tanking. And markets being forward-looking thought they're starting to price in the end of QE3, and that's why it crashed in 2013. Very few people report on that. You don't hear that because there isn't, besides Jordan Royburn, there isn't a good gold channel or good fundamental macroeconomic channel out there. And I don't say that lightly. So Jordan Royburn, I think he's the only good fundamental analyst out there, honestly, and he's a technical guy. Maybe there's a couple others, I don't know, but I don't know of them personally, or ones I think understand the fundamentals. Some people are so hopped up on ideology, they ignore government data, but that's to their own peril. It does matter. So going back, Thursday, good government data, stock went up, gold went down. Friday, sentiment. And so, but sentiment does matter. And markets reach bottom during sentiment's extreme. I was watching The Big Short last night, and I remember at the end, everyone knows about Burry shorting. But then when everything looked horrible, Burry started buying stocks, and they went, "Are you nuts? Are you buying stocks?" And if you look at The Big Short, the movie, you can see everyone said housing cannot go down. Housing is great. Well, what happened? Sentiment was incredibly strong, overly strong. Everyone was buying. Well, guess what? There was no one left to sell. And the first person that sold, there was no buyers. And so what happened? Markets just went down. Buying begets buying, but selling also begets selling. And so then what happened? 2008, all-time lows. Sales, everyone was selling, there was no one left to sell, and one person buying, that just started driving up prices. And then buying begets buying. So if you look at it, you can see Michael Burry shorted on sentiment extremes on housing, but then he was buying at the end when the extreme went the other way. And it is sentiment. And I'm eternally grateful for Avi Gilbert for teaching me that, even though he didn't teach me that in terms of investing. So also look at sentiment. Right now we have horrible sentiment. And so that's one reason I think the floor is rising, and why I think we're at a bottom of gold is because it's not just what was being priced in. You see no recessions, nothing. But you also just see, I don't know anyone that really likes gold. I don't know many people that own gold. I really don't. And some of my friends from school and college, none of them are interested in gold. The only ones are like the true gold bugs and the true believers that are buying, that still own gold and silver. And I haven't seen newsletters. So this is why I think sentiment will turn. You get extreme pours. But right now, it's also fundamentals that matter. We have student loan payments coming up, and that's coming up next month. And I was reading somewhere when it came to credit card debt. What was the other one? Sorry, this is off the top of my head. I should have had it in front of me. Credit card debt, auto loans, and I think corporate bankruptcies. Ever since the Fed started raising rate in 2022, they've been steadily going up rapidly. They're not at 2008 levels at all, but they're really rising. And I think when student loan debt payments resurface again in October, I think they're even going to increase at a more rapid rate, because they're going to say, well, what do I do? Discharge my auto loan payments, or do I discharge my student loan payments into bankruptcy? Well, I can't discharge my student loan payments into bankruptcy, so I'm going to discharge my auto loan payments, or I'm going to discharge my credit card payments. And all of a sudden, you're going to see more and more layoffs. So I think that data won't show up till next year. So I'm not too big on a bull market yet until 2024. I do think one's coming in gold and silver. When, I don't know. It seems like their theme is always next year. Saw a funny meme, someone like with the alien, it turned out to be a cake, but they were laying down and they were like, me waiting for precious metals to rise. So I think we're almost there though. Sentiment's bad. I think it's going to go into another 2019 like run. And then I think a real bad crash is coming. That's my prognostics. We'll see if I'm right. So let's wait and see. Anyway, if you like this video, hit that like button. Subscribe if you already haven't. And I hope to see you next video.